Hello traders, Gary Wagner with the Gold Forecast here. It is Tuesday, December the 28th, approximately 8 o'clock here in Honolulu, Hawaii, and this is the Daily Report. Gold is popping strong to the upside today, up about $20. The interesting thing is that is predominant buying. Strengthening U.S. dollar is tugging at about 20 cents, and predominant buying is moving it up about $20. On today's report, we will talk about the fact that I do believe that pennant formation we spoke about yesterday created enough energy to move this market to the upside, and I will take a look at what I am looking at in terms of very, very short-term resistance levels, all here on today's Daily Report. Traders, we are looking at a 120-minute candlestick chart. I'm putting this chart up so that we can see in a more eloquent manner the fact that we were, in fact, pretty much range-bound ever since we hit this high of 1407, and this high that we hit was back on the 14th. After that, of course, the market came down. It was very, very difficult to calculate or plot really any kind of a resistance point, at least on this chart that we came to. I do have some other ones that show it quite well, but at that point we became range bound. And as you can see, we traded within this range for quite some time. This is the 19th all the way through about the 26th, and then, in fact, rather than making any kind of sizable move, we actually broke back down and broke to this lower Fibonacci level right here. In fact, one of the things that I did the other day was in looking for strong support. I couldn't find it on this chart. This is our Fibonacci harmonics, of course. I could not find it on this chart, but I did go back and see a couple of lows that it did seem to match quite well, meaning this low right in here matched very, very well to these sets of lows right here. Of course, we then moved back up, and today it's really been up and away, and as you can see, it has clearly broke through all of our Fibonacci resistance areas. This 1400 right here, it is currently trading above it, and right now we are finding resistance at 1407. 1407.60 is the high on the ask. Of course, I look at a bid chart, but as you can see, we are right there, kind of tucked up into resistance as we speak. Traders, if you recall from yesterday's session, I talked about the fact that I believe what we saw forming was basically a pennant formation. A pennant formation, of course, is a Western technical pattern in which, as we plot the market, these ranges start to decrease in size, and as these ranges decrease in size, what happens is the energy builds. This is the belief anyways behind this pattern. And when we get to the apex of that particular pennant or flag formation, you will tend to get a breakout. Now, that breakout can be to the upside or to the downside. It can go either way. I did believe, and in hindsight correctly believe, that what we were looking at was a potential breakout to the upside, and I think that we've gotten that this morning. The other thing that's very, very important to me as I look at our longer term daily Henkin chart is that if we are correct and this corrective phase has ended, meaning we have one full cycle from one to the beginning of one, I really needed to see some sort of confirmation. And that confirmation, at least for me, needed to be, of course, staying away from this particular trend line. In other words, as I talked about yesterday, it was critical to me that it didn't really breach far into this trend line. but more importantly, begins to start to move back and trade higher. Traders, I think we got that today. Now, of course, it's a little bit too early to tell, but I will tell you this. In looking at the markets in the way that I am today, I do still believe that our wave count is at least tentatively correct, and I do believe that we are headed for higher prices probably through the rest of the year. Traders, we took a risky stab when we actually went in and bought another position at 1382. My very, very conservative traders, go ahead and scale that out. In other words, liquidate that, pull some profits. In that way, you've got $20 profits. Let that other position ride. Aggressive traders, we can go ahead and maintain both positions. Maintain stops. We will look to move them up tomorrow. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.